Okay, so picture this. You need something done, but it involves like a million steps in different departments and enough paperwork to make your head spin. Enter ServiceNow, the company that turns chaos
Yeah.
into a smooth digital workflow. And they're not just helping businesses. These guys even had a hand in launching a Mars rover.
Before we dive in, if you're into this kind of deep dive analysis, hit that subscribe button so you don't miss out. Today, we're tackling ServiceNow to see if it's investment worthy.
It is fascinating, isn't it? They started by streamlining IT processes, but they've branched out into so many areas: HR, customer service, even security. It's like the digital equivalent of a Swiss Army knife for businesses.
And get this, their customer renewal rate is a whopping 98%. That's practically unheard of. What's the secret sauce? Why are businesses so hooked? It's a few things, actually. Firstly, once a company integrates ServiceNow, it becomes deeply embedded in their operations. Switching to a competitor would be a huge undertaking. That creates a powerful lock-in effect. But it's not just about being hard to leave. ServiceNow is also known for its exceptional customer service and its ability to constantly innovate and adapt to evolving business needs.
So they're not just resting on their laurels, right?
Mhm.
I mean, we've heard they're investing $1 billion in startups to boost their platforms. That's a serious commitment to stay ahead of the game.
You're absolutely right. That billion-dollar investment isn't just about acquiring new technology. It's about fostering an ecosystem of innovation around their core platform. They're betting on these startups to develop solutions that will make ServiceNow even more powerful and versatile.
Now, speaking of being ahead of the game,
Mhm.
a company doesn't get this big without strong leadership. Who's the mastermind behind ServiceNow's success?
That would be Bill McDermott, the CEO. He's known for his aggressive growth strategies and his ability to anticipate market trends. Under his leadership, ServiceNow's subscription revenue has skyrocketed. We're talking a 26% year-over-year increase, which is incredible in such a competitive market.
That's impressive. But beyond the numbers, anything else stand out about their management style? What should potential investors pay attention to?
One thing that really stands out is their commitment to transparency and ethical practices. You'll find detailed reports on their environmental, social, and governance initiatives. They're not just focused on profit, they're aiming to be a responsible corporate citizen. Plus, they're not afraid to think outside the box. During the pandemic, they developed those emergency response apps I mentioned earlier. It shows they're proactive and adaptable, willing to tackle real-world problems with their technology.
Okay, so we've got a solid business model, a forward-thinking CEO, and a company that seems to genuinely care about doing things right. But let's talk about the bottom line. How are their financials looking? Are they as healthy as their customer relationships?
This is where things get really exciting. ServiceNow has been absolutely crushing it financially. Their revenue growth is consistently above 20% year over year, and their profit margins are the envy of the industry. We're talking a gross profit margin of 79.2% and an operating margin of 12.04%. Those are some serious numbers.
Those are some serious numbers indeed.
Yeah.
But I have to admit, something in the research caught my eye, and I have no idea what it means. They have negative working capital. Is that even possible? And is it a good thing or a bad thing?
That's a great question, and a sign of how efficient ServiceNow's business model really is. Negative working capital, while it sounds strange, is actually quite common for subscription-based businesses. It means they're collecting cash from their customers up front,
Right.
often for annual subscriptions, before they have to pay their own bills. This creates a very favorable cash flow situation. They're essentially using their customers' money to fund their operations and growth.
So it's like having a constant influx of cash, giving them a lot of flexibility to invest and expand.
That's fascinating. And, it's fascinating insights like this that make these deep dives so worthwhile. If you're finding this analysis helpful, don't forget all our sources are linked in the description below. Before we go on, let's take a moment to remind everyone, if there are any stocks you'd like us to deep dive into in the future, let us know in the comments.
We're always looking for new companies to explore.
All right, so we've established that ServiceNow has a lot going for it. Strong business model, impressive leadership, and stellar financials. But what does Wall Street think? Are investors as enthusiastic as we are?
Well, the overall sentiment is pretty bullish. The stock has been performing well, and many analysts are predicting continued growth, especially with their focus on AI and automation. Those are hot areas right now, and ServiceNow is well positioned to capitalize on those trends.
That's good news. But when something seems too good to be true, I always get a little suspicious. Is there anything that raises a red flag for you? There is one thing that's worth noting. The short interest in ServiceNow has been increasing recently. Now, short interest is essentially the percentage of a company's shares. that have been borrowed by investors who are betting that the stock price will go down.
So some investors believe that ServiceNow's stock is overvalued and due for a correction. That's definitely something to keep in mind.
Yeah.
It makes you wonder, who are the major players betting on ServiceNow? Who owns the majority of the shares?
The majority of ServiceNow shares are held by large institutional investors, like Vanguard, BlackRock, and State Street. These are the big investment firms with deep pockets and a lot of influence in the market. Their investment in ServiceNow is a significant vote of confidence.
Okay, so the so-called smart money is on board. But what about the people who actually work at ServiceNow? Do they have a stake in the company's success? Are they buying or selling shares?
That's an interesting question. Insider ownership, which refers to the percentage of shares owned by company executives and employees, is actually quite low at ServiceNow. And to add to that, there have been some recent reports of insider selling. Now, this isn't always a cause for alarm, as insiders sell shares for various reasons, like diversifying their portfolios or personal financial needs. However, it's something that investors should definitely factor into their analysis.
So we've got these mixed signals, bullish analysts and strong institutional ownership, but also increasing short interest and some insider selling. It's like a puzzle trying to figure out what it all means. To get a clearer picture of the risks and opportunities, let's do a classic SWOT analysis. Strengths, weaknesses, opportunities, and threats.
That's a great approach. Let's start with ServiceNow's strengths. We've already touched on a few of them. They have incredible brand recognition, huge scale, and those network effects we talked about, where the value of their platform increases as more businesses and users join. And once a company is using ServiceNow, it's notoriously difficult to switch to a competitor because their systems become so integrated.
Yeah, they've really carved out a dominant position in the market. But every company has its weaknesses. What are some of the challenges ServiceNow might face?
One weakness is their pricing. ServiceNow is known for being a premium solution, and that can be a barrier for some smaller businesses or those with tighter budgets. Additionally, their platform, while powerful, can be quite complex, and implementation can take time and require specialized expertise. It's not a simple plug-and-play solution.
So there's a trade-off. You get a robust and highly customizable platform, but it comes at a cost and requires a significant investment of time and resources to implement effectively. Now let's shift gears and look at the opportunities ahead for ServiceNow. What are some of the trends or market conditions that could fuel their future growth?
Well, the overall trend toward digital transformation is a massive opportunity for ServiceNow. Businesses across all industries are looking for ways to streamline their operations, automate tasks, and improve efficiency. And ServiceNow is perfectly positioned to provide those solutions. They're also expanding into new markets such as the public sector and healthcare, which present enormous growth potential.
It sounds like they're really tapping into a global need for digital solutions. But of course, with every opportunity comes a set of threats. What are some of the potential risks that could derail ServiceNow's success?
Competition is a constant threat in the tech industry, and ServiceNow is no exception. They're facing pressure from established players like Microsoft and Salesforce, as well as from up-and-coming startups that are developing innovative workflow solutions. Cybersecurity is another major concern for any company that handles sensitive data. And a data breach or security incident could significantly damage ServiceNow's reputation and financial performance.
Those are valid concerns.
Yeah.
And of course, there's always the risk of a broader economic downturn, which could impact IT spending across the board. So with all of this in mind, what's the overall takeaway? Is ServiceNow a worthy investment?
ServiceNow is a fascinating case study. They're clearly a leader in their industry with a strong track record of innovation and financial performance. But there are also some potential red flags, such as increasing short interest and insider selling, which suggests that some investors are cautious about the company's future prospects.
It really is a fascinating case. You've got these impressive numbers, this clear market leadership, but then these little hints of doubt creeping in. It makes you think. What would be the deciding factor for you? What would make you say, yes, I'm investing in ServiceNow, or nope, not for me?
That's the key question, isn't it? For me, it would come down to their ability to keep exceeding those sky-high market expectations. Can they maintain that impressive growth rate? Or will they hit a ceiling? Can they keep winning over those large enterprise clients and fend off the competition, especially in these new markets they're entering?
It's almost like watching a high-wire act, isn't it? You're impressed by their skill and balance.
Yeah.
But you're also a little nervous they might lose their footing.
Exactly. And one of the things I'd be watching closely is their innovation in AI and automation. These technologies are evolving so rapidly. Can ServiceNow stay ahead of the curve and keep delivering cutting-edge solutions that justify their premium pricing?
That's a great point. Because if they fall behind in the tech race,
Yeah.
those weaknesses we talked about, the complexity, the cost,
Yeah.
might start to outweigh the benefits.
Absolutely. And don't forget about those cybersecurity threats. A major security breach could really shake investor confidence. So for me, it's about weighing the potential rewards against those potential risks.
This deep dive has definitely given us a lot to think about. ServiceNow is a company with enormous potential, but it's not a risk-free investment. You really have to do your due diligence and decide if it aligns with your investment goals and risk tolerance.
Couldn't agree more. And that's the beauty of these deep dives. We're giving you the information you need to make informed decisions.
And speaking of informed decisions, before we wrap up, a friendly reminder, this isn't financial advice, it's just us geeking out over some fascinating data. Always do your own research before investing in anything.
Absolutely. Your investment journey is your own.
But we're here to make that journey a little more insightful and a lot more interesting. So if you enjoyed this deep dive, don't forget to hit that subscribe button so you don't miss our future explorations.
We've got some exciting companies lined up for our next deep dive.
And as always, we'd love to hear your thoughts. Let us know in the comments what stocks you'd like us to analyze in the future. Until then, happy investing.